Okay, you have the controls.
I do?
Yes.
Makes me feel good.
You like having the control, don't you? So see if I can.
Actually, I like to share it with you.
I always get frazzled during this time as I set it up because
Hello.
hey, how's it going?
Good. How about you?
Good. We're just getting set up here.
All right. I am creating echo. I need to find that out.
So you don't necessarily have to be on Zoom. You can deafen Discord if you're on both. Deafen Discord.
I just did that.
Okay, good. You still hear an echo?
No, I don't.
Oh, good.
Okay. I am watching Terry Harper's screen though.
Good. That's good. That's good.
I know.
One of these days he's going to switch it over. He just
Then I tell you how often I do these kinds of calls only for you.
Oh, cool. Well, I can tell you that you have a big fan club.
Thanks.
So that is, I mean, it has changed. It has changed the way a lot of people view the stock market.
Yeah, it changed the way I did. I tell you that. Game changer.
Yeah. So let me see how many people we have on. Just a few people here. Sandy, I can't see Zoom. I'm sorry, I can't see YouTube. So
oh, no worries. I
you
got
can-
that taken care of. Everything's
yeah.
okay.
I just didn't know how many people you had on there.
Well, right now I'm
And,
on doing some other stuff. It's okay.
Oh, okay.
Regardless
All
of
right.
how many we have,
Yeah.
it's all
Yeah.
good. So
I know. I was just going to say welcome here to Bob and Big Boom, and we'll see who else shows up. Am I going to get booted out if I say at everyone that we're starting live?
no, but you know what? Go ahead and give it a try. We'll see if my programming works, right? I tell you, there's something every day I'm learning.
I did it.
A couple people here on YouTube. I got to get better at scheduling stuff. I think that's the only little piece of this puzzle I might have to still learn. But Otis and Philly Jilly, nice to see you guys. So looks like people are rolling into our Discord.
Yeah. Raphael's here. Summit. Peter G.
I know that Pam was going to try to make it, but
yeah.
the good thing is we're recording it.
We are recording.
Yeah.
So for anybody that
Yeah.
misses it, we will have it.
Yeah. And while we're waiting for people to drop in, I'll just remind everyone that we are not financial experts, nor are we offering financial advice. And anything that you hear and say, that you hear and that is said on this program should be construed as educational material and or humor.
Wow. Did you actually print something off the internet for that? That sounded very professional.
No, I did not.
We usually say we're just the boy and girl next door. We're trading and we're hoping to teach you something
Well,
new.
but you know,
like
we
the-
still bring humor and some people don't. So
Oh,
Yeah, I like the humor. I like that.
I'm
Everything you'll hear
glad.
from me today.
The joke last week was somebody was really upset that we were having too much fun while we were training. So,
yeah. So Quiet 191 is here, and MG, and I mean we're starting to get people rolling in in the Zoom
excellent.
channel. So
Well, this is great.
it is 8 o'clock on the dot, and Sandy, I'll let you take it away.
Thanks, Jay. Welcome everyone. This is Sandra with Trading Made Simple, and we have Rich, who is part of our team here at Trading Made Simple, and he is our wheel strategy expert. Now, Richie actually runs his own portfolio with over $1 million in it, and he is showing our Discord for free, basically, how you actually trade the strategy of the wheel. Now, everyone kind of has been introduced to it. Warren Buffett kind of made this very popular, and but Richie actually does it every single day, and he posts his trades. He answers questions. He tells you what his mindset is. And then based on, basically all the questions that he gets within a week or two, we then jump, on the air and start to talk about, what the major concerns are with our traders and the wheel strategy. Because even though it is a highly successful strategy, this still has a lot of particulars that you actually have to learn and abide to. And so, Richie, I welcome you. For those people that have never, been to our live session with you on the wheel strategy, could you give us like a brief introduction, and then we'll get into our lesson plan tonight.
Sounds great. Thanks, Sandy. Appreciate it. And hello, everyone. As Sandy said, I've been doing this now for 3 years as far as being a premium seller, and that's probably the way I'll start talking tonight. I'm a premium seller, really about income strategies for me. You can certainly grow your account doing this strategy. We'll talk more about that, but been retired for 6 years now and just enjoying life. I'm a big passive dividend investor, and I really lay on these option strategies to supplement my income. So, and have really appreciated the opportunity that Sandy and Jay have afforded me with, being on and helping others, because I am about education and hopefully a little humor. For those that know me personally, know I'm a pretty silly guy, but I do take investing seriously. I love it. And I love educating people. I think that's the most important thing, because I'm a big believer in the strategies that I'm going to talk about. And really, I want to start there, and I want to start with mindset. But I have talked to several members offline since the last time we did it, and I've got to know them pretty good. And then I've also seen really good questions and discussion through the chat. And so I wanted to start off with this mindset concept, and I think we'll drill down from there. But until you really get this whole idea of selling premium can be more challenging. But if you get it, it could be the most rewarding. And so I want to start with that. And just as a reminder that when you're a premium seller, so you're selling puts or you're selling cover calls, I'm going to be focused primarily on selling puts tonight. You are engaged in a high probability of profit strategy. I think everyone here knows that when you buy options and when you're a day trader or a swing trader, you have to get everything right. You have to get the stock right. You have to get the direction right, the timing. You have to get the entry and the exit right? To be successful, you have to get all those right. What I love about selling premium is you can get all of those wrong and you still keep your premium. It doesn't matter. And that's the mindset I want you to understand. First and foremost, every trade you put on as someone that's selling premium, whether you're selling at a 20% delta or a 30% delta, you're engaged in a high probability trade. In the case of a 20 delta, that means that if you put on 10 trades, 80% of the time, or 8 of them, are more than likely not going to even come close to challenging your strike price, right? But there might be 2 that do. And that's really what I want to spend my time tonight. I want to talk about the 2 that don't necessarily go your way. Because what I've learned in talking and sharing these strategy over the last couple of months is people really get uncomfortable when the stock moves to the strike price. So we need to talk about that. But I want to make that clear that when you're selling premium, it's a high probability trade. You're not looking to exit this thing really fast like you would in a typical day trade. And I wanted to real briefly talk about a couple of characteristics. I think being patient. I'm going to share an example where the stock moves against you, but then, 3 days later the stock's up, and if you just would have been patient, everything would have been fine. So being patient and following a plan, and that's why I have these 3 strategies up here. Making the decision you make to sell a put, you need to know why you sold the put. So we're going to talk about that. And then I talked a lot last time. Jay caught me on it. I talked a lot about the P&L and unrealized losses and net liquidation value. And Jay made the comment that, Richie, there's short-term traders that have had unrealized losses. And that's all true. So we're going to talk a lot about that tonight too. But I'm going to surprise you with this. If you're selling premium and you're following your plan, you're not going to take realized losses. That's the difference. In fact, you can't take realized losses and be successful with this strategy. Now you're saying that, so Richie, you've never taken a realized loss? Yes, I have. Early on, I really didn't know what I was doing. I wasn't following my plan. I was selling premium on crazy stocks. And so I did have some realized losses. But since then, no, I haven't. And we're going to talk about why that is and why this strategy is so unique. Now, you may be in the trade for a while, but you're not going to have realized losses. So I wanted to start off with that. So let's go to these 3.
I'm glad that you did, because I think one of our first conversations, when we met each other and we were talking about this strategy, I said, how can you, possibly, put your hands over your eyes and not look at your P&L? Tell me about how, normal traders that are not used to looking at a large, and let's say more than 30 or 50% of a loss. Do you have a specific, percentage that you're willing to accept versus maybe, hey, this is the time for me to roll. Let's say that I'm at 50% loss. This is my criteria. Do you have a strategy for that? For those of us that are don't have the core of steel yet.
Yeah, so I'll answer that, but let's talk about the first 3 strategies, because it's going to be a little bit different with each one. But yes, I can tell you right now, you will never be a successful investor and certainly premium seller if you are fixated on your P&L and what I call the net liquidation value. And I have an example of that coming up.
Oh, great.
That is not the right measure of performance when you're selling premium. Okay. I will repeat that. You do not look at net liquidation value when you're selling premium. And I'm going to give an example of why that is. But let's start with this first one. So there's 3 strategies for selling premium. The first one is a long-term portfolio. I'm not going to spend a lot of time on that. But when you sell a put, you will have people that will sell a cash secured put to own a stock. And you might sell it, on a Microsoft. I have Microsoft up here. You might want to own Microsoft long-term. So you're going to sell a cash secured put. You want to get assigned you get assigned, you get paid to own it, and you move on. So that's the first strategy. So when you sell a put, you could be selling it because you want to own the stock. That's the first strategy. Now, the second one, the second reason why you would sell a put is you want to sell a put and you're fine owning that stock, taking the shares, and then selling a cover call on it. Because that's what the wheel strategy is. You sell a cash secured put or a naked put if you're in a margin account. You get assigned the shares, right? And then you turn around and you sell a cover call. That's the wheel strategy. Okay. And then there's this third strategy why you would sell a put is you don't really want to take assignment. You don't want the share. So you want to avoid being assigned. So you're going to deploy a rolling strategy. And we're going to talk about that tonight. I have an example.
Oh, excellent.
Okay. So, but the point is, before you sell a put, promise me, before you sell a put, it's got to be for one of these three reasons.
So you have to know before you get in.
You have to know before. I have too many people that will sell a put thinking they're in the wheel strategy. And then they're all of a sudden they don't want to take assignment of the shares. So something went off. So the most important piece is to follow your plan, as I talked about. These first two strategies, you want the stock to move against you.
Got it.
Think about that. You will make more money selling premium in option 1 and 2 if the stock moves against you and you get assigned. You will. Long term, you will definitely make out. So my point is, let's back up a little bit. You sell a put. If you're a day trader, what I see is if you're a day trader or someone that's a swing trader, you sell a put because you want to sell puts on down day. So let's say you sell a put on Abby at 140 because it had a down day. And then you know the stock was down and it keeps going down and it keeps going down. And then all of a sudden it's challenging your strike price in a matter of 2 or 3 days and you're panicked. Okay. But it's the wheel strategy. So you don't get panicked. You let it, because if you panic in that situation, you're going to end up buying back that option for more than what you receive, because that is one of the disadvantages of selling premium. You are capping your potential because you only make as much as the premium you sold. So if you sell premium and you do it successfully 8 out of 10 times, like we talked about, but then you have 1 or 2 where you're losing, that's not going to work. That's a strategy that will not work. And a lot of new people to selling options will do that. So always have in mind, why are you selling premium? Is it one of these 3 strategies? And then we can talk about what do you do when it does move against you in number 3. And I'm going to have an example of that. But it's really important. This isn't like day trading. Like if you day trade and the stock moves against you, you have a stop loss. We really don't have that when you're selling premium. You shouldn't have that. Okay. Because the first 2 options, you want to take the shares, correct?
Right.
So that shouldn't be a problem. Now, option 3, you might ask, well, why would somebody have an unassigned strategy? A lot of times you'll see people, traders, investors have an unassigned strategy because number 1, they don't have enough capital. We've talked about that. They are in a margin account. If you sell a put on, say, a stock at $100, you don't need $10,000 to put that trade on. Your broker is only going to require maybe $1,000 or $1,500 to put that trade on. So a lot of people will sell puts and avoid assignment because they don't have enough capital to do it. Okay, so there are reasons why people want to have unassigned strategies. It could be you have plenty of buying power, but you just don't feel comfortable owning the shares, right? And that's okay too. But in that case, you're going to roll. Okay, and so let's talk about that real quick. Let's talk about rolling. Let me pull this up right here. Okay. So everyone can see this, right? See this rolling example?
Yes.
So when you, let's say you sell a put.
Oh, so you know what I just noticed is on Discord, we can't see that next screen that you have where it says rolling example. Could you please click on Discord's screen share and just add that screen for us? Welcome to my world.
Did that work there?
No. you're in Discord and you click the share
I
your
click
screen,
share, yep.
and
then
you're sharing the little, I guess, your notepad, right? That's okay. If it's too difficult to do, if you could just
Yeah,
make sure.
I would like for people to see
Oh,
it.
you
Let me see.
do? Okay.
Does that do it or?
No, not yet. So if you click on that, share your screen, do you actually see a separate screen that has your notepad?
No, I don't.
Okay, so
We should have.
that's okay. That's okay. Live and learn. Believe me, trial by error, often more than
So
not.
people can't see this at all?
No, people can't see it, but if you can describe it, people on Discord cannot see it. So you know what I'll do is I'll do a cut and paste, and then I'm going to stick it into the chat box for Discord, okay? So
On Zoom, we can see it.
Yes, on Zoom we can see it, but not on Discord. So
Correct.
continue with your presentation and I'll take a picture of it right now.
All right. Yeah, I'm sorry about that. But
No, don't be.
so and this is really important because a lot of people get confused with rolling because they think they're actually losing when they're not. Again, it's mindset. So you've sold a put, let's just say a Microsoft, and you've collected $150. And you can see that. Hopefully you'll see it in Discord here pretty soon when Sandy posted. But you'll see here that sell to open and you receive $150. That $150 is a done deal. Now, but you have an unassigned strategy. You're not doing the wheel and you're not selling puts to own it in a long-term portfolio. You're in the third one. So you want to roll. So the stock moves against you, and we'll get into maybe the specifics on when to do that. But I want to go through the mechanics of the math so everyone understands this. So you receive $150. You decide that you want to roll. So you buy to close that option for $400. That's why you see the $400 there. You bought that, right? So you received 150, you bought it, but then you turned around and you sold to open a new option. And it may be at the same strike price. It may be lower. It may be further out. We can talk about that, but you receive $700 for doing that. Okay. The net credit is $300. Right. So hopefully you can see that $300. So 150 plus 300 means you've actually received $450. You have not lost $300. Right. You have not lost the difference between 400 and 150. And a lot of people will think that. They think that they have a loss when they don't. So you always roll for credit, right? You always want to roll for a net credit. And when you can't, you just roll further out to make sure that. And I'll talk the specifics on that, but yeah, you can. There are different strategies with that, but I want to make sure everybody understands this math. If you're rolling for a net credit, you are actually doing this as an income strategy. We talked about that. Whether you're relying on that income to pay the bills doesn't matter. This is an income strategy because you're capped, right? You're receiving premium. You're saying cap will go out, bring in that income. So this is an income strategy. You may be reinvesting that income back into the account, but it's an income strategy. So my point is it's about credit here. So you've received 150. Now you're receiving another 300 net credit for a total of $450 of net credit. Right. So you haven't lost anything, even though but it seems like, when you look at your account and it says that you're down, I guess it would say you're down 250 or 300? Right. 250. 250. It'll say you're down 250, but when you roll this, you're basically just closing. Well, you rolled it because you sold another one. Why would you see why I put these brackets here? Yeah. I guess we don't have it in the other one, do we? No, we do. We do. I posted it. So one of the reasons why I put the brackets here, I want you to look at this 150 because you start as a premium seller, you sell a put and you receive the 150. So leave that alone. That's a done deal. All right. You got to think that's a done deal. Now, these next two is what matters. You're buying to close and you're selling a new one. Got it. You've now collected 300. You originally collected 150, but now you've collected 300. That's a total of $450 worth of income. Okay. Okay. So that's the way you got to think about this. And then here's the thing. if you have an unassigned strategy, you could consistently do this over and over and over. I know someone who I respect, she's kind of my mentor,
Mhm.
that has done, she's rolled, her whole strategy is unassigned strategy. She
Mm.
wants to collect credit. She has literally rolled the S&P 500 index, the SPY, for 3 years, and she's
Mhm.
just collected credit. She doesn't care about P&L.
Mhm.
She has collected, it's all about credit to her. And I'm going to show you in a minute how I live off that premium. But she lives off this premium, right? Because now she's collected 450, and then the next month, let's say Microsoft continues to go down, you would roll out another month. Maybe you would lower the strike price. Sometimes you could keep the strike price the same.
Mhm.
You just roll out another month. In fact, if you keep it the same and you roll out another month, you're going to collect more premium doing that. So the point is, whenever you roll, you always want to roll for a net credit,
Okay.
and you will always stay ahead if you do that. That's the point.
Now, before we continue, does everyone understand that, or does
Yeah,
anyone have
please.
a question in regards to actually rolling a strategy further out in time?
Okay, so here's a couple questions here. Marina would like to know, why is the net credit not 450 but 300?
Yeah, it's a great question. So, well, the overall credit that you have right now is 450, but the net credit when you roll, it was 300. You see that negative 400? You bought back the first one for 400. So 400, then you sold the new one for 700. That's a net credit of 300. Because you bought the first time you sold the put, you collected 150. Then when you rolled, it was a net credit of 300 because you bought it back for 400, you sold for 700. I hope that makes sense.
Yes.
I mean,
Okay.
it's basic math. And then now you're at 450. Now let me turn it around on you. What would you need if you had a strategy of closing out at 40% profit? What would you need to buy this back at? $225, right? Half of 450. So it's no longer, you might have put on this trade initially at 150, and
Mhm.
your strategy might have been to take it at 50% profit. That would have been buying it back at, for $75, right? And then that way you make $75. But now, since you've rolled for 300 and you've collected 450, if you still want to have a 50% profit in it, you'd have to buy it back for $225. Just keep that in mind. And so what
Okay.
I do is I write in a journal, I
Mhm.
write down Microsoft received 150. I bought it back for 400. I sold a new one for 700. I'm at 450 right now. So that when I go to my trading platform and Microsoft goes back up, and I
Mhm.
look and I can buy back Microsoft for $225 now, that would be the time that you would buy it back. You would make 50% profit. I hope that makes sense.
It does.
So far, yep. Raphael has a question. Says, if you roll, it seems the stock price needs to move further in your direction for you to collect your full premium. Is that correct?
Actually, no, it's time value. So in other words, if a stock keeps falling, you might have to go further out in time. Maybe that's where he's going. You might have to go further out with your expiration date to collect more than, in this case, you sold for 150. So to match that, you might have to go out, more than 30 days. You may have to go out 45 days or something. That's true. But if you keep the strike price the same,
Mhm.
believe it or not, you won't have to go out as further, because you're going to collect more credit if
Now,
you keep the strike price the same.
what's your criteria for when to decide to roll? And then are you going to talk about like rolling out?
Yeah, we could talk about that. So, and to be 100% honest, I don't use this strategy very often. I use it in the combination approach, and we'll talk about that here in a second. But I'm
Okay.
primarily number one and number two. But when I did do this strategy,
Oh.
because I was like a lot of you, I don't want to own the shares. That's bad. But actually, you'll find out when you do the wheel, you make more money. But
Well, interesting.
When the most important piece when you wheel, when you have an unassigned strategy and you want to avoid assignment, you want to roll before the stock is in the money. So if you sold a put on Microsoft, say at 250, and it was at 270 when you sold it, you want to roll if it gets down to like, if it's 250, you want to start thinking about rolling at 260 or 255.
Yeah, you don't want it to touch.
You want to roll before it gets in the money. And then however, if it does get in the money, that's when you're probably going to have to leave Microsoft at the same strike price of 250 and then just go further out in time, go out another 30, 35, 40 days.
Right.
And you will be able to collect credit. You'll be able to do it for a net credit.
Okay.
So, what you'll typically see people do, traders, and heck, I could even invite someone next time to join me, and they do this routinely. They will go out a month. They'll start off with a month, 45 days. They're not afraid to even go out 60 days. I'll be honest with you. They'll sometimes go out 6 months if they have to.
Wow.
It's all about the net credit.
Okay.
So,
and then when price is actually starting to breach, right, your strike price, that's when you start rolling out. You don't want it to
before it goes in the.
Right.
I personally prefer it not to be in the money before I roll. I want to roll before it gets in the money. I can't say it any more clear. Now there are times where you can't avoid it because maybe there was some event, you wake up and the stock is going to open up below your strike price. That happens sometimes. And if it does, all I'm saying is you can still collect credit. You just might not be able to lower the strike price, because when you roll, you have two decisions. You can roll down the strike price, which means less capital, by the way, because if you rolled from 250 to say 200, it's different. You're going to have 25,000 versus 20,000, right? And then further out in time. So you have two decisions: strike price and what expiration date. It's really just putting on another trade. That's the way you should look at it.
Yeah.
But you always want to do it for net credit.
So can I ask, to make sure I understand? So even though you're rolling something and it shows that you had your P&L is negative, the fact that you got a credit negates. You just keep doing this until it turns in your favor.
Yeah, you can look at it right here, Jay. You can see the map. You're positive $450 right now.
Yes, and that's why he's keeping a journal.
Yeah, I did one today where a call was way in the money, and I just rolled it and collected more premium, even though it showed me a negative on my trade. I still had more cash in my account.
I'm so glad you brought that up. So let's look. Can they see this? Can you copy and paste this too? Absolutely. Sandy?
Yeah.
Yes.
So someone, and I don't remember who it was, but they had a great question about net liquidation value. And I think our brokers don't help us out, because a lot of brokers will set up their platform around net liquidation value. So I want to talk about this a little bit. Whenever are you going to liquidate your portfolio? I own a bunch of dividend stocks. If the stock market pulls back, if I was to liquidate that, when would I ever liquidate? I wouldn't do that. If my stocks went up and I had a big unrealized gain in it, I'm not looking to sell personally, because I'm looking for the income off of those stocks. So just keep that in mind. Net liquidation value is all about unrealized gain and unrealized loss. So let me just give a quick example. Say you sell a put and you collect $200. The person that had the question was, well, I don't think I ever received that money. Yeah, you do. You immediately receive that $200. The next day, the minute after you sell a put, you've received the money immediately. The next day, now the stock's moving up or down or staying the same. Now you are short a put, right? So you have a derivative contract, because as a premium seller, you have told someone you will be willing to buy their shares at a predetermined strike price. So you have this obligation out there that's where the unrealized gain or loss comes from. So say the stock moves up, say you sell, you collect $200, but the stock moves up and now you can buy it back for $100. You have an unrealized gain of $100. Now that might be at which time you decide, I do want to take this off because that's my goal. But you have an unrealized gain of $100 if the stock moves up in your favor. If the stock moves down, say it moves down to the point where if it got to the point where if you bought it back, you'd have to buy back for 400. Now that net liquidation piece is going to show you have an unrealized loss of 200, but you still received the $200. That's never going to change. If you didn't, you'd be down 400, right? So that I just want to make sure that everybody understands that when you sell a put, that money's yours forever. So and net liquidation value is not the right measure when you're selling for premium. It's all about collecting income. This is the last thing you want to look at. You've got to train your mind to get off of this because you will never be successful if you're fixated on your P&L. And here's the thing, and I think I talked a lot about last time, when you're selling premium on the indexes, the SPY, IWM, QQQ, quality dividend stocks, you just be patient. If you stay in a trade for a year and you keep rolling, you're going to have a realized gain eventually. Now, if you're doing it on some crazy stock where it could go to zero, then like AMC, I see people sell puts on AMC. That makes me nervous. I would be nervous looking at my P&L. But if you're selling options on quality companies, it's no different than having a dividend portfolio. Caterpillar might be at 270, it might be at 180, but you're still receiving $480 a year in dividend payments. The same concept is true when you're rolling for credit. That's what I want you to get your mindset. You're selling options on quality companies in the indexes.
Okay.
See the difference? I hope.
Yes.
Gosh, I can take back this bottle of Tylenol I bought today.
I know that's a hard concept for a lot of people, but you
know,
don't want to use this as the measure.
Jay, he has a portfolio, and I think, Jay, since you've met Rich, I mean, you've really started to, do this practice, and you don't have as many questions as you used to. I think you're really starting.
I have a one-trick pony now. It is Amazon, and I keep adding to it. And the only reason I didn't sell a put today was because I want to be exercised, but I don't want to be exercised at today's price.
Right.
So I'm waiting.
Yeah, I'm going to show you this because you just made me think of this. So look at this one, everybody. This is one where I have 2 cover calls on. In fact, you can even see that red line, I think, right here. Tell me. Right there, SWK. So I'm not lying. 2 cover calls.
Yeah.
Right.
Now look at the action on this. This stock went all the way down to 72, and I had my cost basis. What does cost basis mean? That's where you got to sign the shares. So I sold a put, I sold another one, and my overall cost basis where I was assigned those 200 shares was basically $79.90. So I sold 2 cover calls at 80. But here's my point. You see down here, 72, 73, it was stayed down there for a long time, but I kept selling cover calls. And I've collected I'm close to $1,000 now. Now look at it. Now being patient, look, it's up here. What's going to happen in 9 days? This thing's going to get called away, and I'm going to go right back because I do the wheel strategy, and I'm going to sell another put on this, collect really good income, and start the process all over again. But if I would have been looking at my P&L,
right,
and at one time I was down in the P&L, I was down 9 times 200, I was down $1,800. But now look at it. This was a very short time to be worried about a P&L when I'm collecting income every month. I've collected nearly $1,000 on this.
Yeah, this is hard for just strict traders to not look at their P&L.
Yeah, you cannot look at net liquidation. I hate that word.
Yeah.
No one liquidates their portfolio. You may liquidate a position if you're a trader. I get that because you have stop losses. That's different. But this is not the kind of strategy where you want to do that. This is if you're selling puts long-term or doing the wheel, you want to get assigned. If you don't want to get assigned, then you have to watch it a little bit more, set up an alert, and before it gets in the money, then you want to roll.
So I did want to tell everyone that, a couple months back, we did a video with Rich and we said, hey, let's do a simulation challenge. And I was surprised. I did that simulation challenge and I maybe looked at my portfolio. I started in a portfolio with $35,000 and I maybe looked at it like once a week. And whenever, Richie posted something, I bought one put. I was extremely conservative, as I usually am anyway. And I was surprised in 4 weeks, I had made $450 without even looking, really trying. And I never got put, by the way, any of the shares, which was also interesting. And
yeah, when real quick. So when you do the wheel strategy, and Pam will tell you this if Pam's on, I'm pretty conservative. In other words, I will sell at a 20 or 25 delta. I know people that do the wheel strategy that I respect that will sell at a 35 or 40 delta.
Yeah.
And that there you're going to see that they're going to get assigned more. And guess what? They kill me. They kill me as far as returns. But do they take on more risk? Do their P&Ls show more on the realized loss? You bet it does. You bet it does. But they've made more money than me. So just keep in mind when you're doing the wheel strategy, which is number 2, you can be more aggressive or you could be less aggressive. You choose. But my point is, please, before you sell a put, it's got to fit one of those 3 categories.
So I just want to throw in that because, we're doing this follow-up, I'm going to go back to my simulation account and I'm going to continue with this strategy so that our next meeting that we have, I'll give you the update. But for those of you that started your simulation and you backed off as well, because I know that intraday trading and our swing trades, we get, pretty busy. If you've gotten away from it, please go back to it and let's keep going and keep learning in your simulation.
Okay, so I have 2 things. Raphael said, I've gotten $936 profit from paper trading Rich's strategy since he first went over it. Now I just have to fix my IRA so I can actually do it live.
Exactly. That's what I want to do too. Yeah.
Rich is the man. Rich is the man.
Well, that's awesome. I'd love to see that kind of success.
Yeah. And Summit now says, can you tell us something about the same thing in terms of covered calls?
Yeah, I will. And Sandy, while I'm doing that, can you copy this and paste it in the Discord?
I will. Thank you.
Because this is something I've never talked about before. And I think it's going to give all of you a different perspective about selling premium. This is really great what I'm going to share here on the 6,000 premium sold. But yeah, that's a good question, Summit, on covered calls. That by far is my favorite strategy. I view cover calls as checking account money because I have 2 strategies and I'll talk about them real quick. I sell on my long-term dividend portfolio. I just want to double the dividend amount. So I'll go out 6 to 9 months or even a year and I'll sell one cover call on say like Caterpillar and I'll go way out on a really big up day on the stock and I'll collect more than double the dividend amount. In the case of Caterpillar, I received $480 a year of dividends, and I already have received $933 by selling one cover call out to July of 2023 on Caterpillar. So I keep it really passive with my dividend portfolio, with my cover calls. Now on the wheel strategy, which is maybe where you were going, cover calls, the key for cover calls is you want to at least sell a cover call above your cost basis. So in that example with SWK, I got assigned shares at $79.90 or whatever. So I wanted to make sure I at least sold at where I was assigned with my cover call. And you collect more income that way. You collect more premium. I think I collected like $600 for both, $300 for each, so $600 total. But you want to You want to sell cover calls 30, but I'd like to do it 30 to 45 days out with the wheel strategy. And you want to at least do the cost basis. I hope that answers his question. If not, he can come back.
No, he asked about rolling the call.
Okay, now rolling the call would be the same way. In fact, I'm sorry, I should have listened. Rolling the cover call, I did that on Caterpillar. So that example of 933, I initially did one for 710. And so Caterpillar, when I sold that May 2023 cover call I was at 260, and Caterpillar, let me just show you. Caterpillar got really, really hot. So Caterpillar, look, when it got right here, 246, right here, it was 2 days ago, I rolled my cover call. I rolled it from May to July, and I collected enough credit. In fact, it was $223. And I went out to July, and I raised my strike price from 260 to 270 on Caterpillar. So it was the same concept. You want to roll the cover call up in strike price and out further in time to collect more credit. Okay. And the reason why I did that was because I could get pretty good credit for it. And I felt safer because right now Caterpillar's at 255. So if it gets above 270 by expiration day and on expiration day, then I would be required to sell the shares. But I'll be honest with you, I bought it down here at 180. I wouldn't mind unloading my shares at 270. I really wouldn't be, and then getting back into it, because look how extended it is right now. This is at all-time highs. Look at that. So I hope that answers the question. The same concept. You want to roll before it's above the strike price. You want to go up and out in time.
Okay, he says, thank you. He has the same with Meta, and that's why he asked you.
Yeah. Yeah, that's, the nice thing about cover calls is there's no risk, because I own the shares. I want to own the shares. So, and here's the thing, you know what I'll do if it gets above 270? I'll roll out to December of 2023 and collect another $300. I don't mind. And it's just wonderful. It's the best strategy out there, in my opinion. So can I talk about this real quick? Did you copy and paste this?
I did.
So this is something I've never brought up before. So I've talked about cover calls, about how that's checking account money, because if you sell a cover call, there's nothing that can really go against you because you own the shares. I want to own the shares anyway. Now I want to share with you what I do in my portfolio margin account when I sell puts. So on average, I sell, and I don't post everything in the wheel channel, but I sell enough premium where I'm collecting $6,000 in premium every month. Okay, that's what that means. So in other words, I'll sell on SPY, IWM, QQQ, and I collect $6,000. I immediately transfer $2,400 to my checking account. So I take 40% of that premium that I sold, because I've sold that premium. It's put premium. It's not cover call premium. I transfer $2,400 of that to my checking because I'm retired. I want to live on that. Okay. Then my goal is to buy it back at 50%. So once it gets I buy it back at $3,000. That's what the 3,000 is there. And I'm reinvesting 600. The other 10%, the difference between 40 and 50% is $600. So then I'm reinvesting back into the account $600. But I'm living on $2,400 a month based on the premium I sold. It doesn't matter whether, the stock goes up, down. I don't really care. I've collected the premium. It's a done deal. So I hope that makes sense. And now look, you could be someone that says, I don't need to live on the income. So if I sell premium of 6,000, you could just reinvest it all, right? When you buy back for 3,000, you'd be reinvesting 3,000 back into
right, because you're supplementing your income right here with that $2,400.
So I'm just saying that there are people out there that sell premium that live off the premium that they sell, not the realized profit on it necessarily.
Oh, I see. Oh,
see what I'm saying? It's about credit,
right?
But here's the thing, as we've talked about. I'm going to eventually buy this back for 3,000. Want to know why? Because I'm selling it on the indexes. I'm selling on quality stocks. I know eventually I might, now this 6,000 may end up being, at one time I had this up to $18,000 because the market was pulling back and I was wheeling, and I had a bunch of covered calls on. I had some that I have a combo approach, and I can talk about that, where I will do an unassigned strategy one time and then take assignment. I have that where you can combine them,
Right.
you know? So, but I collected, you can live off 40, whatever percent you want. Maybe you only feel comfortable taking 20%, whatever it is. I'm just saying you can do that.
How do you keep track of all of this, Rich?
It's really not as hard as you think. I basically have, and I've shared it with some people. I have a journal. I have an Excel spreadsheet where I write down every time I put a trade on, I put how much premium I've collected. And that's how I keep track of it. Now I could pay for a software that does that for me, but I mean, it really isn't that hard to document your trades. And so I can tell you right now, I could pull up my Excel spreadsheet and it'll tell me that I have $6,000 of premium out there. Or let me break it down. I have 500 out there on SWK or 600 out there on SWK, right? Now I don't plan on buying that premium back, by the way, because it's a cover call. I'm going to let that go and get that called away from me. So I'm going to realize all of that $600, but I can look at any holding and know exactly when I would need to buy it, what I would need to buy it back at to meet my goals. So cover calls, that's 100%, by the way. You want to let that go. You don't want to buy back cover, especially if the stocks moved above your strike price. I actually had someone that did that. They sold the cover call and the stock went way above their strike price, and they thought they were losing because the cover call showed a loss.
Yeah.
They didn't understand that they had the shares, so the shares would be called away and they would realize all of that premium.
Yeah, I think the mechanics of it, if you don't know what all the puzzle pieces do, you get a little confused.
Just remember, the cover call will actually show that you're down if the stock moves up.
That's great.
But if you're selling cover calls above the cost basis, you're fine with that.
Right.
Because you're going to get the shares called away, and you're going to realize
make the difference. Exactly. And somebody was asking that, Soaring Eagle, the P&L differences, what, in fact, let me just make sure that I get that question right.
While you're looking that up, Amar says, I got $1,300 profit from the strategy since Rich's last Zoom session.
Oh, wow, that's awesome.
Who is that?
Amar.
Oh, yeah. Yeah. Okay. Awesome.
Wonderful.
All right. And
Soaring Eagle
you,
says,
Rich.
yes, thank you, Rich. Is the P&L the difference, the profit and loss, the difference between the strike price where you were assigned the shares and the current price that the underlying is trading at right now?
Let me pull up. So he's talking about the net liquidation value?
No, I mean, I believe that she's just talking about, the way that you're identifying profit and loss. Is that the difference between the strike price where you were assigned the shares and then the current price that the underlying is trading at right now? I mean, that would be your profit, wouldn't it?
Well, I wonder if she was referring when I was talking about SWK.
Soaring Eagle, can you please type
I don't know.
in the chat box and confirm what we're trying to identify, just to make sure?
Yeah, because and why she's doing that, she might have been, I was talking about this one where my P&L was showing that I had a pretty sizable loss, and she would be correct because I got assigned at 79.90. I have two cover calls at 80, but look, it was down here at 72. So the difference between 72 and 80 on 200 shares is $1,800, right? So my P&L would have showed that I was down $1,800 in this position at that time. But what it wouldn't have shown, I also had received income for selling puts, and then I got assigned, and I've sold cover calls twice already. This is the third time that I've done it. So I had already made $1,000. So my net would be down $800 because I'm down $1,800 the stock, but I've collected $1,000. Does that make sense?
Yes. Okay. So I wasn't taking that other profit into consideration. So really, because there are different vehicles that you're collecting money here. First, you're selling the puts, you're getting money. Then you get called away. So you still own the money that they gave you, but now you own the shares. And now the shares increase in value. So now you have that difference that's considered a gain as well. Was there
Yeah,
a
so
third
that's
one? I think there was a third one I missed.
third one.
So
Talking to me or?
you're getting the premium, they get the
Oh,
shares, you get the
yeah. So
shares. Okay.
yeah, you sell the puts, you're receiving premium for that. And then when you get assigned, you sell calls, you're
That's
collecting
right.
the premium on that. Now here's the thing. I haven't talked about this.
Hmm.
On Microsoft, I sell sometimes out of the money cover calls. And I could show what that means. So here's the thing. There are some stocks that I feel more comfortable. They're more bullish. And we talked a little bit about this with Amazon, but let's say you sold a put down here and you got assigned at 225 and you got assigned and you were down here. You could sell calls up above where you got assigned. You could sell them up at 250, and the difference between 225 and 250 is $25. So you make on 100 shares $2,500 on the shares going up if you got called away. If the stock went above your strike price and the shares were called away, you'd make $2,500 on the shares. So that's the other nice thing about selling covered calls. You don't have to do it where you got assigned necessarily. You would make no money on the shares if you sold cover calls where you got assigned. Does that make sense? You won't make any money on the shares, but you've made a lot of premium that way.
And then John is asking, can you mix selling puts and calls in this strategy, rolling to an opposite position of them as the market changes? And that's exactly what you do, don't you?
Oh yeah. I mean, if I understand what he's saying is I will have puts and calls on all the time.
Okay.
Yeah. I mean, I'm selling puts on, the other day, the market was way down, but I actually had a couple of stocks that were up and it was a good time to sell cover calls. So yeah, I have a pretty big portfolio and I take advantage of those down days. Like tomorrow, everyone that's premium sellers be looking for those banks. They're going to be, reporting earnings. And if one of those stocks goes way down, I'll be looking to take advantage of it by selling a put on it.
All right.
Okay. So Rich, Big Boom has a question. How do you handle taxes when you're taking out this $2,400? Are you doing mark-to-market accounting or trader tax status?
No, I'm not doing that. At this point, it hasn't, I just started doing it. It hasn't been enough, but it's so funny. I met with my CPA today, ironically, to talk about because I do quarterly taxes. That's the other thing that I do. So I'm basically paying ordinary income tax on that. That's when you're selling options, it's ordinary income, but I am looking at possibly creating an S corp and then paying myself a salary. And doing all kinds of different things because if you're, so I'm looking into that, but you do definitely want to take advantage of all the tax advantages of doing that.
All right. I have a question here from Marina. Will you do less selling puts now, given the market is still so uncertain because of recession talks, or is the volatility versus good on the wheel strategy?
Oh, that's really a great question. Let me pull up the SPY. So in my opinion, as far as what's going on with what the Fed's doing, I think the market's priced that in a lot already.
Yeah.
Even if we go into a recession, I think the market kind of has that priced into it to a certain degree. That's just my opinion. I mean, I sold out in December 2000. I sold out over here, actually right here, because I knew the Fed was going to tighten and look at the S&P 500 come down. But to answer her question, look at this run we've had. We've had a pretty big run. We're back up to 200. So where I would be a little bit more leery is if you sold a put right here, this thing could come back down to here, right?
Yep.
So like if you tried to say this is support right here, I believe it could bounce off the 200 and it could come back down to here if something was to happen. Say that the CPI data didn't. So what I'm saying is I'd be a little bit careful. I would want to sell a put down here. And I do that, by the way. I sell puts at support that was back in October, not here.
Right.
So I would be careful. I am very careful about that.
Mhm. So Pamela has said she's here, and she said in 6 weeks I've made $1,225 on Microsoft covered calls, and I bought the stock at 252. Even though I bought it at a higher price, I've still made good money on it, which has lowered my cost basis. I've made $1,311 on selling various puts. That's awesome.
Yeah. Oh yeah, Pam's really good. I've been working with her a lot, and Pam brought up something that, like, if you get assigned at 250 and then all that money she's bringing in, it actually lowers your break even. So
Right.
I told her on that journal that you keep asking about, how do you keep it all straight? I'm trying to get her to put it actually in the Excel spreadsheet. I think right now she's writing it down like on a notepad, but you'll want to put, if you you know, if you got assigned at 250, so your cost basis is 250, but you've received $1,000 on 100 shares, you're really, where are you? You're really at 240. Your break even's 240 now. So I want her to keep track of that, because what you'll find, I guarantee you, by the end of the year, her break even will probably be about 200 on Microsoft.
Wow.
She will have made enough to bought another 100 shares just in premium.
And I think I think she's doing that. I think she even said she's trying to get up to 200 shares.
Awesome.
Yeah, but that person had a great question. I would be real careful of getting trapped on this run up here, because we could pull back.
Oh yeah.
So you're better off waiting on good quality stocks rather than trying to do the index.
I actually love the indexes. I do both, because the indexes, I mean, if you pull up the options chain, like if, let's say, the SPY pulled back tomorrow to 390, you could probably sell down in this area and get decent premium. So, and get safer. That's why I like about the SPY. It's one of the most liquid ones. IWM is the other one I really love, the Russell 2000. This is a fantastic, and it's inexpensive, right? It's not as expensive. So this is a really good index to sell puts on. But look at that move, guys. It's above the 200 moving average right now.
Wow.
It's, I mean, look at that. It went through the 50, it went through the 100 and 200. So that's a pretty bullish sign. Amazing.
Okay.
Any other questions?
There's some questions here, because this hour has flown by.
It really has.
Yeah. And so we've got about 3 minutes left. And Sandy, did you open this up to the public, or is it just us?
I did. No, I've been asking Rich questions from YouTube, and let me just check Discord really quick, make sure there's no other further questions. And then I just want to invite everyone to our Discord, where it's free, the wheel strategy and the plethora of information. We have an education channel on the wheel itself, as well as Rich, who's posting his trades and answering questions, are all here. And, you know, for those of us that are middle-aged or more,
kids,
and if you're a young adult and you have an IRA, because I know I have like 3 floating around in space somewhere that I do absolutely nothing with, because this was the purpose of this, is like, let's learn this together on a simulated account. So then you can feel confident to take your real IRAs and start practicing this and put it into motion, because it's just a waste of money to have a tax-free account, do absolutely nothing, and it's just floating out there in space. And I know I'm just the girl next door. I know that this has happened to a lot of people.
Well, you can see what Pamela has done with 100 shares of Microsoft. So it doesn't take a lot to do that. All of you young whippersnappers can put that much money into a Roth IRA, and then everything is going to be tax-free forever. So, Rich,
and you know,
Big
Pam,
Boom is asking. Go ahead.
I was just going to say, Pam made that much money in a very short period of time. Very short.
Yeah, that's so true. I mean, for, that's on another topic, right? The money, not the extra capital that we have just sitting in the bank doing absolutely nothing. Again, another vehicle, right? If we just paid more attention to it, we could do so much better, guys, just so much better. And you wouldn't have to be like trading at your screen 24/7, or watching it or being nervous about it or,
Rich, Big Boom is asking if you can look at SPLG.
Yeah. Yep. SPLG is a good one because it's the SPY and it's cheaper. And this is a one you can sell, that's basically the S&P 500, but it's cheaper. It's only $46 and you can do more contracts. And
wow.
And this is a great one. Is that what he was getting at?
Apparently so. So, I mean, that's, I think that's a great move there.
Yeah. This is one I did put in that one day we were talking about, and I put in the channel. This is one that I really recommend that people look at if they can't afford to sell puts on the SPY. It's a more expensive ETF, but this tracks the S&P 500 too, and it's got a decent options chain. It's not like the SPY though, but it's decent. So now the other thing I wanted to remind everybody, please, if you get anything out of this, please make sure that before you sell a put, you know why you're doing it.
Yeah.
I know that sounds funny, but
no, it makes so much sense to me now than it ever did.
This one right here, you got to know where you fit. If you're 1, 2, or 3, if you're in the first 2, don't even look at it. Just let it go and get assigned, and then you're golden. This one you have to, So
yeah, that's hard for us traders to realize that. But the third one is more probably like a lot of people that, and even though I'm doing the wheel strategy in a simulated account, and I'm not really sure if in a simulated account, they'll assign you the shares. I'm going to have to check that. But, very good information to have. And Rich, I really appreciate your time tonight. Here at Trading Made Simple, it's about, so you get into trading and there are 40 different strategies. And there's 1,500 different indicators. And so what, do you want to do? What is your goal? It's really probably one of the toughest jobs while you're learning to trade is what you're going to gravitate to, how you choose to strategize to make your money, and then what are you good at? Just because there's 40 different strategies doesn't mean that you're going to be really good at 40 different strategies. As a matter of fact, Rich, you once tried day trading, intraday trading, swing trading.
Yes, directional. What you guys do, and it's amazing what I can't do it. It's just not my thing. It's not for me. And I can tell you, I want to echo your comments. If you're the kind of person that doesn't have the ability to see red and not worry about your position that's losing, this strategy isn't for you. I'm just going to be honest with you. But if you can stomach that, you're going to find that this is a game changer.
Awesome.
Yeah.
So that just goes to show you the proof there that, you really have to just start investigating and doing some research and trying, right? Dabbling, seeing what you're good at, start to perfect your skills and practice, simulate. So here at Trading Made Simple, come on over and visit us. We'll answer your questions. Hope you had a good evening. Thank you so much, Rich and Jay. Any other questions, Jay, on your side?
No, none here. Just had Raphael said it was awesome. Thank you, Rich, Sandy. Yeah.
All right, back to, I'll start posting the simulation. I'm going to start working on my simulation account. And
we'll see some of you in the chat box tomorrow.
Yeah, we'll see you tomorrow. Have a great night. Thank you so much.
Good night. Thanks again, Rich.